California is at the cusp of a seismic shift in its insurance landscape, a change that aims to reform and revitalize the state's insurance market. Insurance Commissioner Ricardo Lara unveiled a sweeping set of regulatory reforms poised to overhaul Proposition 103, the foundation of California's insurance regulations for the past 3 decades. Commissioner Lara's progressive steps to insurance overhaul. The upcoming reforms come as part of the Commissioner's ambition to achieve a full-scale reform by year's end for both home and auto insurance. At the heart of Lara's reformation strategy lies a clear-eyed assessment and improvement in the oversight and handling of insurance rate filings. With clarity as the guiding principle, insurers will receive more precise directions on submission requirements for rate approval, minimizing the exchange of communications prior to the review process. This initiative will not only streamline submissions, but also grant consumer representatives ample time for intervention consideration. Building on a strong foundation, the second phase of insurance reforms. Hot on the heels of the initial proposals from last month, Commissioner Lara has now introduced the second phase of his ambitious plans for revamping California's insurance industry. This latest suite of reforms targets further enhancements in transparency, efficiency, and consumer protection. Central to this phase is the development of a more dynamic and responsive regulatory environment, one that can better anticipate and adapt to the evolving challenges of the insurance market. These proposed changes reflect a deep understanding of the intricacies of the insurance sector and underscore a steadfast commitment to safeguarding the interests of Californians. This initiative marks another step forward in the state's quest to modernize its insurance system, ensuring it remains robust and equitable for future generations. Historically, insurance losses such as those from wildfires impacting multiple policyholders have led to insurance rate surges and ballooning premiums. These spikes in cost heavily rely on dated rules and historical data, inadequately accounting for the escalating risks brought by climate change and the mitigation efforts that follow. Lara's recommendations seek to shift the basis from a retrospective focus to a forward-thinking approach. By proposing the expansion of permissible catastrophe models to include wildfire, terrorism, and flood considerations, Commissioner Lara eyes a more robust preparation for future uncertainties. Under Proposition 103, insurance companies are free to propose rates that cover future losses. However, unlike public utilities, they're not required to provide insurance to all citizens, Commissioner Lara stated. His new regulation seeks to change this by bringing stability to a volatile market and encouraging insurers to remain engaged rather than retreat from high-risk areas. This may involve permitting insurers to implement elevated rates in these particularly vulnerable areas. Potential impacts on Californians. If Commissioner Lara's reforms are enacted, Californians may face increased premiums. However, this shift could ignite a competitive spark among insurance companies, discouraging them from exiting the market. Such competition and a diversified market landscape could lead to wider insurance availability and the promotion of healthy competition. Ultimately, this scenario presents a potential for more consumer discounts in the future, enhancing the overall value proposition for Californians. Additionally, there are implications for safer communities. The new regulation mandates catastrophe models that incorporate the best scientific data on risk mitigation at every level, incentive local and regional safety efforts. My sustainable insurance strategy is intended to address decades-long neglected issues, Commissioner Lara remarked, emphasizing the importance of integrating scientific advancements and risk mitigation into the insurance models. A balanced perspective on California's proposed insurance reforms. The insurance reforms proposed by Commissioner Ricardo Lara mark a significant moment for California, potentially leading to the most considerable shift in the state's insurance landscape in over 3 decades. This proposed overhaul, driven by the challenges of the present and future, particularly climate change, aims to bring about necessary adjustments to Proposition 103 and the overall functioning of the insurance market in California. While these changes promise advancements in transparency, efficiency, and consumer protection, they also raise questions about the implications for insurance premiums and market stability. Critics and proponents alike are closely watching as these reforms could lead to initial increases in insurance costs for Californians. However, the ultimate goal of fostering a more competitive and resilient insurance market could balance these concerns with the potential for more comprehensive insurance coverage options and future consumer discounts. The emphasis on updating catastrophe models to reflect the realities of climate change and other modern risks is notably a forward-thinking aspect of Lara's initiatives. On April 23rd, the Department of Insurance is set to host a public workshop, aiming to gather feedback prior to initiating the formal process for securing regulation approval from the Office of Administrative Law.